Okay, here we go. Hey everyone, I am Carissa, your friendliest neighborhood agent, and today we are here to speak with Jim Kroll, also known as Bowtie Banker here at TD Bank. Jim has nearly 20 years of experience as a loan officer, and one of his specialties are loans for doctors. So we're really excited to speak with you. Thank you for inviting us to your office.
Thanks for having me.
And now let's get started with our top questions. Who is eligible for the program?
Well, eligibility includes anybody is a current resident or in current fellowship. And then we have this 10-year window for these new doctors that post-residency and fellowship. So within 10 years, or if you're in residency or fellowship, caveat, that 10-year window, they need to be patient-facing in some capacity, whether it's just a couple clinical hours, but they can do research. They have to have some kind of a patient-facing experience in their new job. Program's wide open.
Do student loans impact eligibility and debt-to-income ratio? For viewers who don't understand debt-to-income ratio, it's basically how stretched are you financially after paying off your monthly debts, such as credit cards, personal loans, car loans, things of that.
Great question again. Student loans are usually a big burden on people these days because it takes a lot to go through education. How the doctor program looks at it is if we can show that you're not having any payments for a 12-month period, we negate it completely. Now, from a comparison, for a conventional loan, if you have a student balance without a payment, they'll take 1% of that balance and they'll have it as a monthly payment. Big difference between being able to avoid it altogether or to have it included. And if we can have that 12-month window where we can show that post-closing we're not going to have any payment obligation, we don't register. It's great.
What is the requirement for proof of income? Does a future employment contract start date impact eligibility and the size of the loan?
So we have a great opportunity for those that are going into contract and start a new employment. The bank will allow you to close 90 days before the actual start date. So you have to pass your requirements for your contract, such as the licensing and any other requirements of testing that goes along, but we'll allow you to close 90 days. An exception will go to 120, but that 90-day window allows us to start before their life gets really crazy and very intense in their new career.
How do interest rates and private mortgage insurance, PMI, typically compared to those of a 30-year conventional loan?
Sure. So for PMI, private mortgage insurance, it's basically the consumer has to take out an insurance policy to protect the bank from default, but the consumer pays. So that's when you're putting less than 20% down. Because we don't have PMI on our doctor loan programs, we don't have to worry about it. There's no concern, there's no additional extra payment, so it alleviates a lot of the stress of having just more financial burden in their life. From an interest rate perspective, well, if you're putting 20% down and you fit in the doctor program, we actually have a reduced rate below our conventional pricing. When you get to that 80 to 95%, we're about the same as conventional pricing. It's a 95 to 100%. They usually add about a quarter or like 3/8 to the rate because it's 100% financing is a big risk with no mortgage insurance. So we're in it to have the loan succeed.
Okay, so a proper win-win.
Yes.
Doctors are offered a loan option that require no down payment. How common are transactions like that in the city, considering that minimum down payments are based on the board?
So the board, just for clarification, is a group of other apartment owners that kind of give governance to the building. So on a condo, they have a board. On a co-op, they have a board. On the co-op, their board is a lot stronger because they can determine how much that can be leveraged, how much the borrower, how much they can basically determine anything about the future buyer. With a sponsor sale of a co-op, there's no board requirements. That's how we squeeze in on the doctor loans on co-ops. Otherwise, it's condos and single-family homes. Yeah, pretty common here in the city on the condominiums because people want to put 5 or 10% down, and that first-time home buyer in that $1 million to $1.5 million range fits perfect without the mortgage insurance. Single-family homes out in the outside area, those are great because there's no board approval, 100% financing, slam dunk. I over-document how this is not a non-conventional loan. It's very unique for our doctors and dentists that are out there. Mm-hmm. And, typically with education, there's success.
Yes, recession-proof.
Very recession-proof.
And I think that that's about all the time that we have with Jim today. Jim is really an educator and he is your cheerleader. So really your success is his success. If we haven't gone to all the questions that you have, please see his contact info in the description below.
Thanks. Talk to you soon.